Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stennebeck on Bloomberg Radio.
We're going to talk about Robinhood because the company just out with earnings. Shares actually moving lower in the after hours. The company reported net revenue for the fourth quarter that missed the average analyst estimate, coming in at $1.28 billion. Transaction-based revenue missed expectations. Options revenue came in below expectations. Equities revenue came in above expectations. Net interest revenue came in slightly below expectations. Adjusted operating expenses came in below expectations. Is everyone keeping up?
Yeah. And we got a little bit about outlook, right? Sees 2026 adjusted operating expenses and SBC, $2.6 billion. That's a little bit, $2.6 billion to $2.73 billion. So again, that stock, we're looking at a decline of about 6% here in the aftermarket.
I want to bring in Neil Sipes. He's a financials analyst for Bloomberg Intelligence, or the Bloomberg Intelligence financials analyst. He joins us here in the Bloomberg Interactive Brokers studio. Robin, it's an amazing story of what the company's been able to do over the last few years and go from being this upstart to competing with the biggest names that are out there. Expectations going into this were relatively high, even though the shares have been under pressure of late, but down 8% in the after hours. What's your immediate reaction?
Yeah, so I think the immediate reaction is that we know that Robinhood is sort of building a franchise in the shadow of Schwab, we'll call it, right? But ultimately today, Robinhood, as we know it, earns about 60% of revenue from transaction-based sources. So the things you were listing off, crypto trading, options trading, equities trading, all that is incredibly important and part of the lifeblood of the fundamentals for Robinhood, which has been really strong in 2025. In the fourth quarter, activity was pretty strong. It looks like we missed estimates on crypto, which of course is a very big story to start 2026 in terms of the sort of dive that we've seen in prices in that space. And so ultimately, I think the question is, what happens to retail sentiment more broadly as we move forward? We've obviously had pretty steep pockets of unevenness in the markets tied to software, tied to AI scares, et cetera. And when crypto's, 20-25% of your revenue, and that's, very well off the highs as well, the question is how engaged do the retail traders stay where, 75% of customers are below the age of 40 on Robinhood. The average account balance is $12,000 in those accounts, right? So where do you go from here when some of the things that you were most active in trading in are not going up and to the right? Well,
maybe that's prediction markets.
And that's, something that I'm sure they'll point to on the call today. And, that's a business that frankly didn't exist 12 to 18 months ago. And now it's, somewhere between 5 and 10% of run rate revenue for Robinhood. So they've created that sort of out of thin air. What we do know that when you say prediction markets, 90% of that is actually sports betting.
Yes.
So that's certainly, a question that we have broadly across the industry of should that be on the application where you're, supposed to be investing long term. But ultimately what Robinhood has really done, and the mantra is, giving clients what they want, access to it in a very easy, cheap way to use, and that's what they're doing. So for now, it's there, and that's going to be a tailwind to the extent that it's allowed by regulators to stay there. So we'll have to see how that develops.
Yeah, it's interesting. I was just thinking about, all right, so Robinhood is about a $77 billion market cap company. Schwab is about $181 billion. We've spent a lot of time with the Schwab folks and at some of their big financial events, and they play a lot with the registered investment advisors and wealth management.
And so Robinhood doesn't have that business.
Well, that's why I'm thinking, are they apples to apples? Is it that, can Robinhood really become an entity that really gives Schwab a run for their money, or those that are also competitors of Schwab a run for their money, or is it not the same thing?
I think today you see two very different business models. Yeah. I think the long-term goal of Robinhood, and I think the businesses that they've been pushing in, which is, by the way, a small unit in RIA custody as well, is sort of going to look like that business. The problem is, maybe not the problem, but the client profile on Robinhood just is very different. We talked about $12,000 average account balances. That certainly could be different in spot rates in February than it was at the end of the year as well, mind you. And you look at Schwab, where the average account's north of 200,000, right? So it's a different client set. They transact differently, they invest, they trade differently. So ultimately, the monetization of those customers is different. In 20, 30 years, when the average customer on Robinhood looks more like Schwab's today, perhaps the revenue makeup will, resemble more like Schwab, something that's perhaps a little bit more durable, less cyclical, but still different today.
One question before we move on, though. I mean, Neil, do clients on Robinhood, as they get a little bit older and make more money, are they staying on Robinhood or are they going elsewhere?
I think that's the question, and we're still sort of in that feel out period where there's always been concern of graduation risk, we call it, for Robinhood, where eventually you'll move on to the more sophisticated platforms like a Schwab that are perhaps less flashy on the mobile app, and you can do less things all in one place, but are more geared towards those longer term investors. And by the way, give you access to those wealth platforms, which Robinhood is looking to do, but those customers just aren't really demanding it yet.
Or maybe AI just replaces everybody.
A perfect segue. We're speaking with Neil Sipes, financials analyst for Bloomberg Intelligence. An AI tool aimed at creating tax strategies sparked a sell-off in wealth management stocks today. Speaking of Charles Schwab, down 7.4%, Raymond James down 9%, LPL Financial down 8.3%, Stifel fell 3.8%. Is this overdone?
I think early days, we're still digesting what it all means, but I think you could argue that some of the fears are perhaps a little more draconian than they should be. AI isn't new in wealth management. You've had big players like Schwab, Morgan Stanley talking about AI initiatives that they've been rolling out over the past handful of years, which most of which are aiming to boost advisor productivity. So we were just talking about Schwab, talking about Robinhood. That's mostly self-directed, right? You're pulling out your phone, you're making the trades that you want to do. When we think about Schwab and Raymond James, LPL, Morgan Stanley, these are much more that human touch advice. You're going in to meet with the advisor and providing more of a holistic and comprehensive financial plan for your life. Those are, relationship-driven businesses that, yes, can be shifted by AI or actually enhanced, we think, by AI, rather than disrupted and, completely, disintermediated by removing the human and completely shifting the wealth management model. We think that's less of the story here and more about incremental positives from AI, albeit over the long run, you can see some of those efficiencies competed away in the way of fee compression, right? So if things are easier and cheaper to sort of provide that financial advice, like some of that tax planning software that came out today, frankly, that helps financial advisors do their job, which really just kind of improves that productivity.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I want to bring in Kathy Jones, Chief Fixed Income Strategist at the Schwab Center for Financial Research. She joins us here in the Bloomberg Interactive Brokers studio. I got a nice chuckle with your most recent note because I'm kind of a sucker for Ron Burgundy. But you said, well, that escalated quickly. And you were talking about, it's funny, you were talking about what happened last week with the Anthropic and Claude and, the SaaS stocks and concerns about legal. Like, what happened? I know you're covering it from the fixed income perspective, but that's how your note starts.
Yeah, I know. I think it's you get to a point where valuations are really high, the story is widespread, and then anything can come along and kind of burst the bubble, at least temporarily. And it looked like there were a lot of leveraged positions that were being undone. And, we see this in cycles. We've seen it over and over again. So I think that was mostly what was going on.
Tim just wants to say, I'm Ron Burgundy. I feel like if you're a guy, like they all know the words of the movie completely.
Hey, Kathy's the one who wrote about it in her note.
I love.
It is a great quotable movie.
It is a great movie. So let's think about the environment. Retail sales. and we had a great discussion with our Stuart Paul and Ira Jersey to talk about the data and also the reaction in the Treasury trade. It's a long ways away, though, to the next Fed meeting. A lot can happen. So I don't know. What's the constructive discussion for you when you look at a weak print on retail sales and what's going on in the consumer? And it's not just that. We talked about consumer delinquencies and so on and so forth.
Yeah, I think people have talked for a long time about this division between the well-to-do and the not well-to-do. And no matter what letter you want to assign to it, there is a pretty big divide based on upper income versus lower income. And I think what we're seeing is the slowdown in hiring, the tightness in the job market now has probably leaked through to people's confidence in terms of spending and activity. And I think that that's something that probably will continue to unfold. But in aggregate, which is the numbers that we looked at, the economy is still growing at a healthy pace.
15% worth? Yeah. President Trump put that out there. Sorry, I have to keep going there because
you are not going to get the answer that you want unless you talk to President Trump.
I know. Well,
and this was from his conversation with Larry Kudlow.
The White House is listening. Come on. But I mean, the realist, because things catch headlines, things go around on social media, and people are like, "Look, we can get 15% growth." We can't get 15% growth.
No, and in fact, it's tough to get 3 or 3.5, which we have right now, because the labor force is not growing. In fact, it's stagnating and declining because of the immigration policies, and then older people retiring out of the workforce. So when you look at GDP, one simple way to think about it is it's the number of people in the labor force and what they produce, right? And if the number of people in the labor force is declining, then they have to produce a whole lot more just to keep growing.
This is such an interesting demographic conversation because immigration has, for so many years, people coming into the United States has helped the U.S. with its, we're not having enough kids problem. Right. But that might not be the case moving forward. Kathy, I want to talk more about today's environment because this is not your first rodeo. You've seen some stuff. What's unique about this environment today?
Well, I think one thing is the immediacy of the reaction to every headline that we get. Because you have so many active traders and you have actually technology where people can just, there's systems that look at just one word and there's a trade that gets generated from it. So the reaction, the cycle of reaction is very, very fast. And then it corrects and then it goes back and forth. But the overreaction function is just enormous. The other thing that's unusual is all this business with the Fed. Generally speaking, the changing of the guard at the Fed is not that big a deal and not followed.
But you said generally speaking. These are not generally speaking times.
That's true. What is different now is this whole drama around who's going to be the Fed chair. Usually it's a pretty dry conversation that just people like me care
Wait, do you have discussions with your family? They're like, so Kathy, tell us about Kevin Warsh. Like.
Well, actually, I do get questions from the family because they
because they know you, right?
And they're spectators to this. They're not involved, but they're spectators. Yeah. And they're like, whoa, what's going on with this? So it is, though, much more in focus. And it's not just that Kevin Warsh is the nominee, and that he was in the running, but he came from behind and all that. But that his the things that he said are quite dramatic in terms of breaking heads and making major changes and rethinking the way the Fed operates. Those are very big comments for an institution that typically is pretty slow moving.
Do you believe that the Fed has overreached in terms of the things it touches? Like there's some things people have even talked about, climate change and other things, as you know. Have they overreached?
Well, I think to the extent that these things have economic impacts, it's something that the Fed should consider. We don't want to wake up one day and have everybody saying, gee, we should have thought about some of these major issues that affect the economy because it's the Fed's responsibility. So I don't think it's overreach. I mean, people have their own opinions about all this, but I think that
putting politics aside.
Yeah, no, anything that touches the economy needs to be on the table at least for investigation.
Do you have faith that the Fed will stay independent?
I do. I think it's, clearly the president wanted to select somebody who was in favor of cutting rates. So presumably that's what we've got. But it's a committee of 12. I think when Warsh comes in, he's got this theory about productivity, allowing to cut rates and redoing the balance sheet. He's going to have some tough conversations, I think, with the Fed staff. You've got hundreds of PhDs in economics are going to come in and say, well, show me your model, show me how it works, demonstrate to me. And these are the people who inform the various voting members at the FOMC.
The bond market has thus far said, okay.
The bond market said okay to everything so far
wild.
lately.
It's been
pretty steady.
Right? That's good.
Yeah, it is a good thing. That's what bonds are supposed to do. I think that, our perspective is you've got an administration that really wants lower rates. You've got a Fed now that's going to want lower rates. You've got a Treasury Secretary who's on board with doing something to help lower rates. We're probably going to see lower rates. So I think you kind of roll with this. But we see a steeper yield curve being the result.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Our next guest has an incredible window into all that. Her 120-year-old family-run firm. It's a construction firm. It's been behind some well-known and very large projects that everybody knows. The Barclays Center in Brooklyn, the Oculus in Manhattan, the new Terminal 1 at JFK, the Lincoln Financial Field where the Philadelphia Eagles play.
These are cool projects.
Yeah, they're big. This is infrastructure.
This is infrastructure. Great to have back with us as we dig into our weekly Women, Money, and Power, where we speak with some of the most influential women across the business world. Cheryl McKissick Daniel is chair of the board of McKissick & McKissick. She joins us from Westchester. She's also author of The Black Family Who Built America, The McKissicks, 2 Centuries of Daring Pioneers. That book coming out last August. Cheryl, it is good to have you back with us. We want to talk to you about a few things. But first up, we are kind of throughout the 3 hours here on Bloomberg Businessweek Daily looking at the economy in different ways. And when people are building things or talking about building things, willing to commit to projects that might take a few years to complete or even longer, it's a great read on the economy and comfort about the longer term. What are you seeing? Are people comfortable about building and making plans to build right now?
I believe they're cautiously optimistic. I think that's the best way to put it. We just finished JP Morgan Chase's corporate headquarters, beautiful building constructed over a period of, I want to say 5 years. And then we're at JFK Terminal 1. And Terminal 1, as you know, was supposed to open in July, but now it's opening in October. But there has been a little slowing down of Phase B while we're in the process of securing new airlines to take gates. And so it really depends on the market you're in. I know you're aware of what's happening with Gateway.
Yes.
Huge concern for the construction community. A loss of 1,000 jobs on Friday and numerous consultants who were participating on that much needed critical infrastructure.
This is the $16 billion Hudson River Rail Tunnel that's largely come to a halt due to the Trump administration's decision to freeze its funding. Is McKissick working on that at all? Is it involved with that?
No, we are not working on that project. We were on the original project when Governor Christie stopped the project.
I know that's how long this has been. That's how long this has been going on. I don't need to tell Carol because she comes from New Jersey every day.
Oh my God! And New Jersey politics is always engaging.
It is, but it raises a really important question, Cheryl, and that's about cities and the federal government working together. It's about private companies, family-owned companies, large corporations working with cities and the federal government. That dynamic seems to have really shifted in the last year, and I'm curious about your view because you work with so many different agencies, state, local, and federal, how you navigate an environment such as this.
Well, when you look at the complications of just sheer building in New York City, you wonder how anything ever gets built. But what I have learned is by developing very good relationships with the building department, with the architects, the engineers, the politicians, the developers. Everyone has to be on board, because you don't ever know when you're going to need to contact one of those individuals to help push a project along. And I have seen that over my 35 years of building in New York City, that the relationships really matter. You don't know if it's going to be the fire department. You don't know what it's going to be. It might even be the MTA, because the MTA, is throughout the entire city. And if you build within a certain range of their property, then you have to involve them. And so it's just one of the most complex, complicated cities to build in the world.
What's interesting about construction right now? Is it, I think about, it's interesting, we're talking about the White House and the EPA and kind of getting ready to, it feels like, roll back things that have been so important to protecting climate and people's health in general. And so we've seen trends in buildings being cleaner, LEED certified, and so on and so forth. But when you look at what's going on, what are the trends that you are seeing when it comes to construction right now?
Well, definitely now we have the Climate Control Board and the climate control goals that the governor would like to see in place. So we're definitely seeing more buildings come online that are all electric, which creates a whole nother problem all by itself, because where is all the electricity coming from? We are so close to capacity. I think next year we're at capacity with all the electric vehicles, all the buildings, all the data centers.
So what is that? What are the implications of that? Does that mean that we don't actually have the electricity that we need? Does it mean we see rolling blackouts? Does it mean we see people who have electric heat not being able to heat their homes in the winter?
Well, I think we've run into that already. The grid just cannot support the supply.
But those are two different things, right? One is grid resilience and the other one is actually electrical capacity.
The power itself.
The power itself. And you're saying we don't have the power, right?
Both.
Yeah.
I'm saying we need both. We need both.
Yeah, I think this winter has proven that here in New York for sure. Yes.
And so we're going to have to be innovative around that. If it's firing up old plants, hydro, electricity, whatever it's going to take, because the demand is just so great.
It's time to harness the sun at this point. It's pretty, we talk about the affordability issues. I mean, we were just talking at home last night about our electrical bills, trying to understand, and we've done things, energy efficient light bulbs and all that good stuff. And it's just crazy. Hey, before you go, I know we're going to have you back. Your book, this book, The Black Family Who Built America. You are the 5th generation leader of your family owned and run firm, roots back to Tennessee, really family roots even further back here. Tell us why you wanted to write this.
Well, I wanted to get this story out because it's extremely fascinating to have a Black family that's in a very difficult profession of architecture and construction to make it to 5 generations. I mean, as we know, it's difficult to have a second generation. It's about 40%, third generation's 18%, and fourth generation's like 3%. So to make it to the 5th generation is an incredible feat. And so I also wanted to get out this book, especially during the time of erasure of Black history. This book talks about another side of history that a lot of people don't know, because now the name of our book is The Black Family Who Built America, but of course we didn't build all the buildings in America, but Black people had largely a big hand in building a lot of the structures in America, and we're like the hidden figures. And it makes sense. I mean, history and books follow money, power, and authorship, right? Not necessarily labor. And we were the labor behind these buildings and structures. We weren't able to seal documents. And so although we could have been constructing and designing, we were pretty much forgotten.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The EPA plans this week to repeal a policy that provides the legal foundation for a raft of rules regulating greenhouse gas emissions, marking President Trump's most consequential retreat from the fight against climate change. Some more details here. A move to scrap the Obama-era endangerment finding. It's a 2009 scientific determination that greenhouse gases endanger human health and welfare is expected as early as Wednesday. This is according to a person familiar with the details. That policy, though, underpins rules including federal emission standards for cars and for trucks. It's just one of the many things that Mark Gongloff watches. He's an editor for Bloomberg Opinion who covers the climate. He joins us here in the Bloomberg Interactive Brokers studio. So I want to talk about some of your recent columns, but first we want to talk about this. Yeah. The Trump administration has almost successfully dismantled, from what I've read, much of the work that has gone into having the EPA serve as sort of a stopgap against climate change.
Yeah.
An accurate assessment?
Well, not yet, not entirely yet. The goal of getting the EPA to undo what's called its endangerment finding is a long-term goal of a lot of conservatives who are now running the White House. It started back in 2007. There was a Supreme Court case where the Supreme Court said that the EPA was required to manage regulate greenhouse gas emissions. So great. The EPA in 2009 under Obama said we're going to do that, and where we find that greenhouse gas emissions are a danger to the economy, a danger to public health. So we're going to regulate it for that reason. Perfect. So then there were a series of other moments where the EPA said, yeah, we're still doing that. But all along, people were trying to undermine that. There was that 2007 Supreme Court decision. One of the people who dissented on that was John Roberts. Now he has a 6-3 majority. And so the hope is that ultimately they will get to the Supreme Court where the Supreme Court will say, yeah, never mind, we're going to undo that. But for now, it's very illegal to do what the EPA is talking about doing because the Supreme Court has said this, that it's required for them to do this under the Clean Air Act of 1963. In 2022, we passed the IRA, which feels like 100 years ago now. But in the IRA, Congress, in its infinite wisdom, said the EPA has to regulate greenhouse gas emissions. And then under the One Big Beautiful Bill Act, the Republicans who passed that didn't bother to overturn it then. So there's all this legal precedent that says the EPA has to do this. And so that may be one of the reasons why they kind of softened it a bit. They did cut it down to just like vehicles and maybe some industry stuff and they're leaving power plants alone, which again is a little bit of cognitive dissonance there. You can manage some emissions, but not others. Where do you draw the line?
Yeah, and we can draw lines, right, around a coal plant or something and just say it's just going to impact this environment. It's not going to get into the space.
Right.
You're being
sorry.
Facetious.
I had a lot of siblings, so I grew up on sarcasm. No, but what's interesting is I go back to ESG, environmental social governance. Like if you really go to the core, it was like how these kinds of factors could impact a company, right, or an investment, and these are things to be thinking about. Companies see the impact of climate change, and you get into your coverage nonstop. You talk about the U.S. alone has taken $7 trillion, a $7 trillion hit from extreme weather in the past 12 years, making it twice as expensive as the Great Depression. There is a cost from flooding, from a higher earth, from a hotter earth. I mean, in multiple ways. In
multiple ways. It affects business. A lot of this stuff, a lot of this deregulation is presented and sold as a way to cut electricity costs. And okay, fine. But you can't say that you're doing that while you're also making it difficult to build solar and wind, which is probably cheaper and easier to build than a lot of other stuff right now.
Wait, so this stuff is supposed to cut electricity costs by taking some of this away?
Yeah, they're going to cut electricity costs. They're going to take this away. They're going to make it easier to burn fossil fuels. They're also going to do a big coal rollout tomorrow. They're going to try to put the heart paddles on coal again. I mean, it's still alive. It's still there. I mean, we could get into the pit here, but it is still alive, and it's in the ICU. But he's going to keep trying to bring it back, all in the name of lowering costs. But you're lowering those costs. You're only lowering some costs. You're doing away with a whole bunch of energy supply. At the same time, you're raising demand with all these data centers and stuff. And at the same time, as you say, these hits to the economy keep growing. And other central banks around the world realize that. Other governments around the world realize that. And so those costs are mounting. And there's health costs and economic costs too. And both of these are making health insurance and home insurance much worse. And so, this is a whole bunch of stuff that the EPA, the U.S. government has a big interest in that it's just going to wash its hands of.
So that brings us to another recent column that you wrote, and it is about the recent cold snap that we're in, or we're just coming out of, the snowstorm 2 weeks ago, and the effect on the economy in the United States of extreme weather. What is this in the context of an environment that many argue is one that experiences climate change, but then folks are coming out and saying, wait a second, it's so cold. Like the president, he said this recently. He said this 10 years ago. He said it recently. Wait a second, it's so cold, there is no global warming.
Well, ironically enough, the senator that went on the floor of the Senate decades ago with a snowball and said, there's no climate change because I got a snowball. The woman who put the snowball in his hand is one of the people who wrote the EPA endangerment thing that's going out. That's going out right now. So these are people who have been ideologues about this for decades, and they don't care about the science. And you can look at the chart, and cold weather hasn't gotten worse or better over the past 20, 30 years. Some people say it could get worse because of the changes in the jet stream, so you could get more polar vortexes. They haven't proven that yet. But what we can prove is that cold weather doesn't go away. It's still cold up there in the Arctic, cold enough to freeze pipes, dump a whole bunch of snow, wreck infrastructure, take lives. That cold snap took a lot of lives. And so you can't ignore that at the same time as you have to be able to do both. You have to be able to acknowledge that you're going to get all kinds of weather. The environment is just getting more chaotic, and some of it could be cold weather, but a lot of it, overall, we're getting hotter, so a lot of it is going to continue to be wildfires, floods, et cetera.
Hey, one of the things I was thinking about, Mark, and I think about California, who kind of just, goes its own way when it comes to rules and regulations, and often sets the path for the rest of the nation. So EPA can do this, right? Yeah. But are states going to still do their own thing? I mean, they've got to think about attracting citizens who want to live in their state, and if the environment is crappy, they're not going to be able to do that.
Totally. I mean, I think that may be one reason why some people have kind of pushed off on this EPA thing, because if the federal government says we're in charge of everything, then you can turn around and say, California, you can't manage emissions. The federal government's doing it.
Right.
And now that's not doing it anymore, so California can say, okay, we're going to manage emissions. And then there's another little weird thing there with, like, if you tell automakers, hey, don't worry, blow all the emissions out of your tailpipes that you want, they're not necessarily going to rush to do that because consumers don't want it. California probably doesn't want it.
It also costs expensive things to retool, right, and how they make things.
Right. And then if you get somebody sort of a reality-based president or Congress coming in another 4 years, they may go back and say, hey, fix your emissions again. And so they're not in a rush to undo all this stuff.
Yeah. I think one challenge that people have is, unless they've sort of seen this up close, whether they've lived through the Palisades fire or a flooding, in Florida, they don't necessarily see the effects of this stuff. I'm wondering if that could change. We just spoke to Cheryl McKissick-Daniel from McKissick & McKissick, and she said, we're in a position in the United States where we think we're going to essentially run out of electricity, or even the grids are not being able to handle the demand that we're seeing in the coming years. Like, do we take it for granted, I think, in the United States that when you turn on a light, it goes on. People who from lots of other countries around the world who come to the United States are like, when I turn on my stove, there is not a flame there sometimes where I come from. And that's just the way life is. Yeah. Is that a possibility here in the U.S.?
Not broadly speaking that I can see in the immediate future. I mean, Puerto Rico is part of the U.S., and as Bad Bunny reminded us the other night, they have plenty of electricity problems. If you don't manage your infrastructure, you do get these kind of problems, and in some places you will see that happen. Data center demand might not rise to the level we expect. We can do things more efficiently. And again, if Congress and the president were just working on energy efficiency, which they also don't want to do,
right,
then you could milk a whole lot more out of the fossil fuels, out of natural gas, and at least burn less of it in order to get more economic growth and more energy that you need. So there are plenty of things that we can do, plenty of levers that we can pull.
All right. So every time we talk with you about the environment and climate, and sometimes like Tim and I are super depressed about it, and you're like, but wait a minute, you always have optimism. Do you still have optimism?
I guess I have to in order to, keep doing this every day. I do think, you look around the world and you look even in the U.S. I mean, we canceled $35 billion in clean energy projects last year, but
we saw some wind farm stuff go through, right?
Courts are letting wind farms go through. Stock and bond investors are investing in green infrastructure and the energy transition around the world. The demand keeps rising for this stuff, and it does feel like there is an energy to this that you can't push back against forever. The issue right now is the damage that can be done in the short term, but I think in the long term, the momentum is just too much to overcome.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.